Welcome back, everybody, to our second episode of Quick Hits with Roy Bingham. Roy is with BDSA, as he talked about last week, which provides market intelligence and consumer data to really provide insights to the most important businesses in this industry, the brands and the retailers. We are now sitting with the smartest guy in the room, in my opinion. It's big shoes to fill there, Roy, but thank you for being with us again today. And I want to talk today about Illinois. Everybody has kind of blasted out this headline that Illinois has done $1 billion of sales revenue in their first year, which is the fastest any market has gotten to that number. And certainly is an exciting number for people to see, but do people really understand it? And that's why we want to talk to you today. So Roy, let's start and talk a little bit about the categories that drove that growth in the market.
Yeah, so it's all very well with this tremendous growth, but you've got to try and dive into what's causing the growth. I mean, the first thing to look at is the medical versus the adult use market. And now the medical market back in January was $23 million. By November, and we've processed in detail all the data through November, not yet through the end of December, it was up to 31 million. So not a lot of growth in the medical market, as you might expect. It's basically been nearly flat throughout the year. All of the growth has been on the adult use side, which went from 39 million in that spectacular January month, all the way to 75 million in November. So that's where most of the growth has been. Then when we think about the categories, it was very interesting. At the beginning, we had concentrates representing 41% of the market back in January. That's extremely high compared to any other state. And it was partly driven by availability. Yeah, there was a tremendous lot of demand and there wasn't a lot of flower available.
Yeah, I was going to say a lot of the markets, when they start out, you usually see flower and pre-rolls dominating the sales categories, don't you?
Yes, well, it very much depends upon what products are available. But normally, yeah, flower and pre-roll will be about 55%, 60% of sales. In this case, we had concentrates 41% and you had edibles at 21%. So the manufacturers had a decent amount of supply of those products. Pre-roll was only 6% and flower was extraordinarily low, it was only 29%. And that was basically that there wasn't enough inventory of flower, and the prices were extremely high, of course, for flower as well. But the demand was there. It was literally queues around the block, as you probably remember.
Sure.
If we scroll forward to November, concentrates are still high, but 32%. That's more in the normal range of a more mature market. Edibles, 16%. That's bang on about what happens in Colorado, Oregon, Washington, Illinois, Arizona, Nevada. You know, very similar already at about the normal levels. Flower picked up significantly. So flower's up to 34% of sales, pre-rolled up about 7%. So what does that mean? It means that the growth, flower doubled, pre-roll more than doubled, concentrates went up about 35%, and edibles went up about 30%. So if that's all that you were doing, your business focused on one of those categories, you know that if you doubled in flower, you were doing about what the market did. You grew 36% in concentrates, you were keeping up with the market. Now, interestingly, of course, brands did a lot better than that. And we can talk about that.
Yeah. And this is really fascinating because, I think, the existing illicit markets in a lot of states tend to be flowered products. There's not a lot of manufacturing operations that are going to create those things. And certainly, I know a lot of people that live in the Chicago area, having some roots there. And yes, I'm speaking directly to you, my cousins. I knew that they were really excited about the edibles when they came out as an opportunity for them. So, let's talk about how many brands were in Illinois. It seemed that there was a very kind of finite number of licenses issued in that market. Obviously, some very big players that came in, able to scale up their operations quickly. But it also somewhat had a limited number of brands. And he talked about, the oil category. I mean, Select, Curaleaf had a big presence in the Illinois market. And, they own the Select oil brand, which is one of the top brands in the country, if I'm not mistaken.
So, Illinois market only had 56 brands. To put that into context, in Colorado or California, you're looking at thousands of brands. So it was pretty limited in terms of the number of licenses. And a consequence of that is fairly high concentration. And what that means is, the top 5 brands in Illinois for the 11 months of the year that we processed the data had 56% of sales, just 5 brands. We see that in any of the mature markets. For the top 5 to have 30% would be pretty high in other markets. And the top two brands are running at a consumer sales rate of $100 million annualized by now, which is, very substantial. And so the big boys are doing well. And the big brands have got off to a very strong start. There are, of course, a lot of other contenders down there at the bottom end of the 56 who've got great potential too, in a market that's going to double in the next 18 months or so.
Yeah, let's talk about that growth for a second. So great first year, right? I mean, if you're a rookie in the cannabis industry like Illinois is, it's a great year for you, great stats to put up and being able to repeat that. I'm sure that we saw a lot of the activations of those licenses in and around the higher density population centers, Chicago, Springfield, et cetera. And there's still somewhat a limited number of locations that people can purchase at that will expand over time. So what do we expect in the next year, 2 years, 3 years for growth in Illinois would be the first part of my question, Roy.
Well, it's a big state. I used to live near Chicago, and it's a magnificent city. And clearly, the market in Chicago has huge potential, as does the rest of the state. So that's the first thing. You did $1 billion in a state that is 5 times bigger than, I can't remember the math, than Colorado. No, 3 times bigger, something like that. And Colorado's doing $2 billion. So you've got enormous potential. You're going to get to $5-6 billion almost certainly. It's just a question of how quickly. Mm-hmm. And as long as the regulators don't make it difficult, the consumer demand is clearly there. We've done a detailed survey of Illinois consumers, and you can clearly see the same kind of patterns that you've seen in other states in terms of who those consumers are, what their likes and interests are, when they consume, how they consume, etc. So it's going to follow a fairly predictable path that everyone can feel confident about. We're looking at a market that's going to double over the next 18 months, something like that, I think, and then double again over the next 2 or 3 years after that.
Is it kind of like that technology, what is it, Moore's Law, that the technology doubles in speed every 18 months? Well, that'd be great.
Like that, isn't it? Yeah, no, I'm not sure it goes on forever. And I think I heard Moore's Law is actually slowing down a bit.
It has. There is a diminishing return on that at some point in time as you kind of get into.
Yeah, but it didn't slow down for decades. Yeah.
But we're inventing quantum computing now, so don't worry about that. We're going to be going even faster in the future. But I want to follow up on the second part of that question about the growth in Illinois. We have some exciting new markets coming online on the East Coast, most notably New Jersey, with the expectations that New York, Pennsylvania, Connecticut will also follow suit with the opportunity to capture tax revenue that's desperately needed in some of these state governments. Are we going to see the same type of acceleration when these new states come online? Are they going to accelerate? Do we expect that it's not going to take 3 or 4 years for some of these state markets to get to $1 billion, that they're boom out of the gate? I mean, New York, New Jersey, highest population concentrations in the entire country out on the East Coast.
Yeah, if the regulators don't put hurdles in place that slow everything down dramatically, and if they're reasonably liberal about the number of licenses that they award, and therefore people are able to get their operations up and running and stores up and running, then we're going to see the same kind of growth rates that we saw in Illinois. It's really a regulatory question.
Well, Roy, this has been a little bit longer than a quick hit, so we'll pass the Dutchie, so to speak, on this episode. It's been fantastic and fascinating speaking to you today. Anybody listening, we encourage you to visit bdsanalytics.com and certainly visit MJ Brand Insights. We look forward to next episode next month, and talk to you soon.
Thanks, everyone. Thanks, George.
All right. Thanks, Roy.